The Dow has been in an obvious uptrend. But notice every time you see a doji up in the overbought condition and it opens lower, the simple doji rule, the selling starts immediately. This is one of the first basic rules that the Japanese rice traders point out when they're identifying what to do when you see a doji. The simple doji rule is prices will usually move in the direction of how they open after a doji. The fact that we saw the pre-market futures trading lower today told us there was a good probability that at least they could come down and test the T-line in the Dow. Why was this test important? Because notice what the T-line has been doing the whole way during this uptrend. It's been holding. Now we have a very simple trading strategy. The uptrend remains in progress until we see a candlestick sell signal and a close below the T-line. We've got an evening star signal, stochastics heading down. If we see the pre-market futures opening lower tomorrow, we know this downtrend is still going to be in progress. The simple doji rule was very clear on the NASDAQ today. You can see a doji right here, right on the T-line. Notice how they gapped down below the T-line and started selling. Just this information right here allows the candlestick investor to know that if things are opening lower, especially gapping down below the T-line, that the sellers are taking control. That at least advises or alerts the candlestick investor to start looking at the long positions that might be starting to get a little bit weak. Our advice has been to have some short positions as well as long positions in the portfolio over the past couple of weeks. Not because there was any great selling pressure, but the upward pressure of the market was starting to get a little bit soggy, especially witnessed in the NASDAQ. And there are good sell signals. Our recommendation to go short on FFIV was based upon a bearish kicker signal. Remember, the bearish kicker signal is very simple to identify. You have an uptrend, it opens here, closes here. The next day, they gap down below the previous day's open and start trading the opposite direction. In very simple logic, this tells you that the investor sentiment has been kicked in the opposite direction. Knowing that simple fact allows an investor that if they were long, there was only one thing to do when it gapped down here. That was to close it immediately. We were recommending to go long on MNK on a positive open. Very simple. Look at all the series of dojis in here with a bullish engulfing signal or left-right combo, which is a strong bullish signal, and then bullish confirmation with it coming up above the T-line and up through the 50. A positive open would have given us a wave 1, a wave 2, and a very good level to show where the bulls were stepping in. This is why we look for bullish confirmation on a recommendation. Notice what happened. They gapped it down, and so that took us immediately out of recommending or going long on this and knowing immediately to start going short because of a bearish kicker signal. Now, our rhetorical question always is, do you always get big, huge trades like this based upon the candlestick signals? The answer is no, but the probabilities of being in a big short position like this is made much more advantageous for the candlestick investor by knowing what happens normally in human nature. Utilizing candlestick signals is just common sense of what's going on between the bulls and the bears. As you can see, the uptrend in lean hogs. And then a couple of days ago, we had a hanging man harami. A harami tells you the buying has stopped. This puts a very simple, logical trading strategy in place, knowing that if it opens lower and trades lower after a harami, you want to be going short. In this case, all you had to do is put a sell stop below the low of that harami, and now you're in the right direction. And because stochastics are just rolling over, you can pretty much try to calculate or visually calculate where the next support level is. Again, this is not rocket science. This is just taking common sense signals and patterns that the Japanese race traders have identified over 400 years to tell you exactly what's going on in human nature. That'll be it. We'll see you in the chat rooms.